we'll start. Thank you very much for joining on what is quite a balmy evening. So I do appreciate that it would be so much nicer to perhaps be in a pub beer garden instead of here. So thank you again for joining. Welcome to this second session of Economics is Still for Girls. We hope you enjoyed last week's session, which was led by Councillor Mariah Priestley, introducing us to local government finance. In this second session, we are turning our attention to tax. We aim to demystify the topic that's traditionally been dominated by male voices and encourage inclusivity, whilst also championing fabulous women here tonight who are successfully navigating in this space. But before I start, I think it's only fitting on this today, the 5th anniversary of Jo Cox's murder, we take a minute to remember all those who knew her and are missing such an incredible woman today. So please, can you join me in a minute's silence?
I'm so sorry, I lost the sound. Can you hear me?
We're silent for a minute.
Yes?
1 minute. Yeah,
okay.
Thank you. We'll say 30 seconds.
I'm so sorry, Marianne. I did not hear, I lost your sound, but if you can hear me, I'll just jump into my presentation.
So hold 1 second, 1 second. I'll just introduce you. So to kick off, can you hear me now, Sarah? Can you hear me? Sorry, there's always gremlins.
Yes, I can.
Fantastic. Okay, so to kick off what I hope will be a lively session this evening, please, the order of the session today is quite informal, so please get ready to ask lots of questions. If you want to indicate in the chat your wish to ask a question, I'll come to you at the end of the speakers' participation, and then we can move on. If you want to have your question read out, then pop it into the chat. We're also being joined by Dame Angela Eagle this evening. So if you have questions for her, please get them ready. No questions are silly questions. We're all here to learn and share knowledge. So please feel free to pop questions in. I'm now going to hand over to Sarah Hall, who's the Head of Movement and Partnerships at Tax Justice UK. Previously, she had held senior campaigning roles at Amnesty International, Stonewall and Save the Children. Her latest campaign success is getting the UK government to agree to a historic deal to end global corporate tax dodging at the G7 finance ministers meeting 10 days ago. As always with progress, it doesn't go far enough, but the campaign continues. So I'm now going to hand over to Sarah to speak to us, and over to you, Sarah.
Thank you so much for inviting me in for this wonderful introduction. I'm going to try and share my screen now, and I hope it will work so you can see my presentation. Can everyone give me a thumbs up if you can see it? Great, excellent, wonderful. So yeah, so I'm really, as Marianne said, I work for Tax Justice UK, and we do what it says on the tin. We campaign for tax justice for a more effective and fairer tax system. And I want to tell you a little bit about how we could fix our broken tax system here in the UK. Now I need to just keep moving my slides along. Let me try again. There we are. First things first. I'm so excited to be here at this Women's Network event because really we need more women talking tax. It is still a very much white men in suits kind of domain, and it really shouldn't be. Also, you know, for ourselves, the tax justice movement in the UK needs to be more diverse, more women, more people of color, and that's really important. And if and to me personally, and just to share a little bit about my journey into the tax justice world, I started this job last September, and before then I really wouldn't have known very much about tax, and also would have probably thought this wasn't for me. I ended up by accident because a colleague recommended this job for me, and I think without that recommendation I would have said, nah, I don't know anything. And really, let me assure you, it is really not rocket science. We all pay tax, and we all really should have a view and an opinion, and we shouldn't be too concerned about expressing it, because some of the top lines, as you will see, are actually quite simple, at least some of the principles behind what we think is fair. So yeah, that's what we're hoping to create, a tax system that is fair and effective. And really, in order to do this, we need more diverse voices speaking out. You know, we need women and many others speaking about tax and about their experience with tax. And I mean, tax has a bit of the reputation of being boring, but really the tax reforms we propose are really popular with the British public. Last year we did an public attitudes work with Salvation at the University of Sheffield, and I'll show some of the findings as we go along. But really, how do we fix our broken tax system, and what's wrong with it? It's really quite easy, really. Those with substantial wealth and profitable companies need to pay their fair share. That's really the bottom line. At the moment, what we have is that our tax system really disproportionately taxes consumer spending and income from work, and that really doesn't hit the wealthiest, often actually hits the poorest in society. So it's just not proportionate who pays which tax in the UK. And I hear you say, okay, that sounds great. How do we tax wealth more? And there's one thing which is an absolute no-brainer, and I cannot believe we haven't yet done that, is really to reform capital gains tax, which is the tax you get from income from shares or investment properties and such things. We really need to reform it so that it's taxed as the same rate as income from work. At the moment, this isn't the case. The Office of Tax Simplification's estimate is that that would bring in £14 billion per year to the Exchequer. There are other ways of taxing wealth in addition to that. So, for example, we could have a wealth tax. Last December, the Wealth Tax Commission, which was a commission put together by academics from the LSE and Warwick, and also had, you know, lawyers, professional tax people on its commission, a really broad range of experts. They looked in detail into how would you do a wealth tax in the UK. And so, for example, their recommendation for a one-off wealth tax would bring to the Exchequer, you know, an estimated £200 billion, over 200 billion as a one-off. As always with tax, the devil is in the detail. Where do you set the threshold, etc.? You know, these are just estimations, and obviously all this can vary. But you know what we can see from this, it would bring in substantial amount of money, which we, you know, really desperately need in the UK. And even better, it is really popular. So our public attitudes work shows that 60% would be supporting taxing capital gains tax at the same income level as and the same level as income. Here we've got a quote from one of our focus groups. Why should someone who is working hard to stay on the breadline, why should they pay more tax than someone who makes all that money from shares? Why indeed? Makes no sense at all. Again, here's a bit of a survey. 74% think the wealthy should pay more tax. And another of our recommendations is taxing profitable companies. So Mariana mentioned in the introduction, we've taken a first step to end global corporate tax dodging, that basically multinational, really profitable multinational operations shift a lot of their profits into tax havens where they pay literally 0% tax. So the G7 finance minister took a historic first step. We campaigned hard for it. and they agreed to have minimum 15% or at least 15% minimum global corporate tax rate. There are lots of things wrong with that deal in terms of we think the rate is too low. Tax Justice UK and other really renowned economists like Joseph Stiglitz called for the rate to be set at 25%. At the moment, this is going through a complex international process, G20, OECD, etc. So this isn't the end, this is just the beginning. And it's really important that lower and middle income countries get a fair deal. The way the deal is agreed at the moment, it would seriously disadvantage them. So there's lots more work to be done also to ensure that companies like Amazon will actually be included in a deal. So there's a lot of detailed policy work still needs to be done. And also, as always, crucially, the political will to make these reforms really ambitious and that they really bite. But if this would be successful, for example, our estimation at a 21% tax rate, so let's say there is negotiation, there's a compromise, we estimate that this would bring into the UK 13.5 billion per year. And another thing which is hopefully in the works, the Chancellor announced that corporation tax, which is currently at 19%, is set to rise at 25% in 2023. This is really important, really, really important that he doesn't backtrack on this and makes it actually happen. Again, this would bring in an estimated 17 billion per year. So, you know, really significant sums. Yeah, there's a bit of public support. And again, our survey shows how 81% agree that tax avoidance by large companies is morally wrong, even if it's technically legal. So huge public support for these kind of reforms. There are other reforms which, you know, we could use to make tax fairer. So reducing pension tax relief for high earners, or also reforming the broken council tax system, for example, by introducing a proportional property tax. So, you know, incredibly expensive houses in London don't pay the same band of council tax as a much low value property in the Northeast, for example. There's a really good campaign. Check it out. You can also enter how much you could save on council tax, or what it would mean for you at fairershare.org.uk. It's another campaign worth looking at. Again, public support, 55% support a flat rate of pension tax, you know, of that kind of reform. 67% supports reforming council tax. So it's closer linked to home's current value. And generally, just to really sum up how much support there is for taxes on wealth, and really crucially, also among conservative supporters, as you can see on the figures here, the support among conservative voters for these reforms are actually higher than in the you know, general public itself. So far from being some left-wing, you know, policy proposal, they are really popular also with more conservative members of society. And yeah, people would be prepared to pay more tax even, you know. Here we have a quote from a focus group. If I would pay more tax if I could see real change, education, minimum wage, cost of living, less poverty. So people are also prepared to, you know, use their own money to help fund important public services, for example. Here we are, that's 48% who would agree with the statement. So, you know, even a substantial amount of people would be prepared to go down that route. Lastly, let me finish on why all this matters to women. So wealth inequality disproportionately affects women. For example, many women, when they have children, women are very likely to have, you know, little or no savings. Women receive significantly less income from property and investments, etc., than men. Ownership of wealth is fairly even between men and women until they reach their 30s. And then men start to pull away, and overall women have about 40% of the UK's stock of personal wealth. And it doesn't unfortunately improve as we get older. Women are less likely to have private pension pots, and if they have them, they tend to be much smaller. So by the time a woman is in her early 60s, her average pension pot is a fifth the size of that of a man her age. And this is just the data we have. To my knowledge, we haven't even got a lot of data on intersectionality. You know, this is just women in general. What about, you know, women of color, women with disabilities, et cetera, et cetera. To my knowledge, we don't even have that statistic. So we haven't even started counting that. So, and I know that Bernie is going to speak a lot more in detail about, you know, the gender justice aspect on all this, but I just wanted to flag some of the reforms I mentioned and the impact on women. But that's it from me. Thank you. I'm looking forward to hearing any questions and hopefully be able to answer them after Bernie's talk. And yeah, please do stay in touch, and you can also send me emails. You can also sign up to our weekly updates if you want to go on a journey with us about tax. But yeah, thank you for having me.
Thank you so much, Sarah. Thank you so much. Please, could you pop in some of the references that you made in your presentation into the chat so that women can take and you know where to look for some more information, and yes, so some really interesting stats there. I'm now going to move on to our next speaker. We now have Bernie Smith. Bernie Smith is, big shout out to Bernie Smith, as she's a former FWN mentee and who is now a very successful woman working as a senior policy lawyer for the HMRC, and she's been there for 13 years on a range of taxes and duties. She's formerly lectured in law in the University of the Gambia, and in 2019 she moved into international development. She's now regional tax advisor for the FCDO, covering programs in Ethiopia, Somalia, Kenya, Tanzania, and Rwanda. She's based in Addis Ababa, and in her younger days, she volunteered as an advisor to Michael Foster, who was then the MP for Hastings and Rye. So I now have the pleasure of going over to you, Bernie. Take it from here. Thank you.
Thanks very much, Mariana. And I don't think you can see my presentation yet, can you? You can? That's great. I can't see it. Great, okay. So let me start by introducing myself. Well, thank you for the introduction, in fact, Mariana. I haven't got much to add. Just to say, as you said, I've worked in tax for most of my life. I was a tax lawyer at HMRC. Prior to, I also spent a bit of time lecturing in law in West Africa, and got interested in international development, so moved over to FCDO, then DFID, to work as a tax advisor in different East African countries. I mentioned that for a couple of reasons. One is because a lot of the examples I'm going to use are from developing countries rather than the UK, but Sarah's already given you a background to the UK, so hopefully that'll work. Secondly, all of these I'm about to say is my own views and not official government views. And thirdly, you me down on the flyer as a tax and gender expert, and unfortunately I'm not. I'm a kind of a tax and gender enthusiast, but I haven't done any primary research on this, and I think the lack of experts in the area is, kind of a big issue. So I will start my presentation. So you say you can see my slides. So I can't see them.
So you're still on the first slide. It's in if you could put it into slideshow mode, it would be easier to read, but other than that.
Okay, sorry, this is always the awful bit of every presentation, isn't it? Let me try again. I tried hard to do this before I came online. I'm slightly encumbered by a slow internet connection here in Addis Ababa.
That's, I think, the best excuse I've heard so far of a slow internet connection. usually, you know, it's like, I'm sorry, we've got bad connection here in Brixton, but Addis Ababa trumps it. Don't worry. If you do you want to?
Yeah, I tell you what, Mariam, I did just email you my slides, so I wonder if maybe you could have a go at doing it.
Okay, let's see.
And while you do that, let me start talking from my slides, which you can't see. So the first slide, which you can't see, is about a question about why is there discrimination in tax codes? So in other words, why would there be any gendered aspect of a tax system? And the best quote I've found for this, which is on the slide, you can't see, but you will shortly, is one from something that's actually unpublished, but I thought it was such a great quote, I've put it here anyway. And it says, if gender has not been part of the assessment for the design of tax systems in a world that's so clearly unequal, it may be that tax systems are doing nothing to improve gender equality, or in the worst case scenario, are reinforcing patterns of behaviour that maintain the status quo. Indeed, tax policy has been drafted in a particular context and informed by a set of ideas that are as likely to be gendered as any other part of life. So, in other words, of course, tax systems are going to be gendered. They are created in an ecosystem, in a world that's highly gendered, that's misogynist, that's man-made, is artificial, you know, with the backdrop of all the kind of political and financial context. So, of course, they will be, gendered. And so the next question is, why do we care? Does it matter? And I'm probably, you know, speaking to the wrong audience here, trying to justify this, but sometimes when we speak at tax and gender events, we need to justify it. And so the two reasons we give are, first of all, because we believe in gender equality in itself as one of the SDGs, as a, you know, UK legislative requirement, but also because gender inequality reduces economic well-being generally, as most of you I'm sure know. And so the statistic I'm using today is from the OECD from last year, which says that failing to achieve gender equality costs up to 16% of world income every year. Next slide, please. So then the question is, how do we think about tax and gender? How do we start to kind of penetrate this really difficult subject? Because gender issues penetrate every single part of the tax system, because it's an artificial system and it's man-made. Every single part of it, we can find gender issues. So a good way to break it down is to think about tax policy, tax administration, and then women working in the tax field. Next slide, please. So I'm going to start by talking about policy and just do a little kind of primer for you, a reminder. If this is too basic for some people, my apologies. But just in case you forgot, we've got some ideas about why government tax, and this is the kind of orthodox response. You could argue with it, but there are 4 reasons: to raise revenue, to finance government spending, to redistribute income and wealth, to manage demand in order to meet government objectives, or to correct a market failure. And when we say correct a market failure, what we normally mean is to correct something that the free market hasn't corrected itself. So a good example, in the view of the prevailing government, I should say. So a good example would be environmental taxes, where we try to redress climate change, or some excise taxes, like known as sin taxes, where we try to use the tax to change behaviour. So, for example, cigarette taxes, where we put a high tax on cigarettes to reduce cigarette consumption. And sorry, just to go back, the graph I put there This is principles of good taxation. And again, you could argue about what this means. And we've got 6 principles there, but I think you can reduce it to 3 and say a tax system needs to be efficient, equitable, and enforceable. Those 3 things are all needed in order to have a well-functioning tax system. And those 3 principles don't always match up to each other, and they can sometimes be in conflict. So, for example, the most efficient way to collect tax would be to have a single lump sum on everybody every year at the same rate. But that wouldn't be equitable because it wouldn't take into account people's different financial situations. And it also might not be enforceable because it would be potentially so unpopular. And probably some of our older listeners will recognise that the poll tax, which Margaret Thatcher tried to introduce, was a bit like this. It was a single tax on everybody, and it proved very unpopular, and therefore ultimately wasn't enforceable, and potentially led to her political downfall. The poll tax, it could have been okay if all that money had been taken and then spent in a redistributive way. So if it had all gone to the poor, directly back to the poorest in society, perhaps we wouldn't complain about it that much. But of course, that wasn't what Margaret Thatcher chose to do with it. But the point I'm trying to make is that would have been efficient, but not equitable and not enforceable. Next slide, please. And so here I'm just reminding everybody of some of the different tax types, the direct taxes and indirect taxes. Direct taxes, which are normally levied on wealth, income and profits, like personal income tax, social insurance contributions, corporate income tax, and they tend to be progressive, as in the more you earn, the more you pay. And then you have indirect taxes like VAT, excise taxes and trade taxes, which are levied on goods or services at a flat rate. So everybody pays the same. So they are essentially regressive taxes. Excise taxes, if you don't know what they are, because this one seems to confuse people sometimes. So these are like an additional tax, which used to be normally on luxury items. So things like, they used to be on things like perfume and I think some luxury cars. So they were more of a revenue raiser for the government. These days, they tend to be more about addressing behaviours and are sometimes known as sin taxes. So cigarettes and alcohol and gambling, environmental taxes, and more recently in the UK, the sugar tax. And then at the end, I put user fees. And so this is a bit off piece, but something that is debated a lot in the tax field is whether user fees should be considered as a tax. And when I say a user fee, I mean something like a fee to go to a school or a fee to use a library. In the UK, a lot of that is free, but I expect you find in some councils, some things like maybe swimming pools or something would be free and something wouldn't be free. And the traditional kind of viewpoint has always been, well, if the revenue authority or the local authority charges a tax on it, then it's a tax. Otherwise, it's not. But the other way to look at it is to say, if I'm, how am I experiencing that as a taxpayer? So, for example, if I'm, somebody in a developing country without much money and I have to pay my tax, but I also have to pay a fee for my kids to go to school and another fee to have my rubbish collected, for example, to me, those all seem like taxes. So certainly the more feminist argument is that we should, when we're looking at tax incidents, and I'll explain that in a minute, but when we're looking at tax incidents of people, we should also consider these user fees. Next slide, please. Oh, I think you went forward too. Oh no, sorry, that's it. Yeah. And so this is just a quick look at tax types in the UK. This is a bit out of date, but there you can basically see the income tax is the biggest revenue earner for the government, followed by national insurance and then VAT. Thanks. Next slide. And so this slide is about how we can think about gender in tax systems. And the quote at the top that gender equality just doesn't happen by itself is relevant here. And there are kind of 3 stages of what I could sometimes call 3 stages of ambition. So we can look for direct discrimination. So tax rules which on their face treat men and women differently. We can look for indirect discrimination, so rules which on their face treat men and women the same, but in their application treat men and women differently. And then the third, the highest level of ambition, is using the tax system to achieve gender equality, so using it as a tool. And we sometimes call this gender transformative tax policies. Next slide, please. And look, every tax presentation has to have one of these slides where we look at funny taxes from the past. I haven't got that much time, so maybe we should skip through it. But if you want to come back and look at all the crazy taxes from the old days, there's always a lot. Next slide, please. Okay, so I'm going to start with talking about direct discrimination. And we don't have much of that anymore in the UK, right? So direct discrimination are rules which directly treat men and women differently. In fact, when it was discovered, I think, or realised last year, that Jersey had a rule about women needing their husband's permission, or I mean, it wasn't permission, but it was like signature, so it was permission, before they could file their returns or have discussions with the tax authority. This made kind of headline news. In the Guardian there, you can see that article. So, you know, less of these, thankfully, in the UK these days, but in a lot of countries, there are still rules, often, you know, left over from the old days, antiquated rules, which treat men and women differently. So, for example, give different allowances to a male, a male head of a household compared to a female head of a household. Next slide, please. So this is about indirect discrimination, and this is really kind of the key to what we talk about when we talk about tax and gender. Like, this is the meaty bit. So this is a tax rule which which has the effect of treating men and women differently because of their different position. So because women are in a different kind of economic position as regards to their earnings, their childcare obligations, property ownerships, and so on, the tax rules, which seem to be the same, apply differently. And one that's a real live issue in a lot of OECD countries at the moment is second earners, where the second earner relationship will have a higher effective rate of tax than the first earner, for a bundle of reasons which we'll put together, but including rules relating to family-based taxation, and also because of reductions in the dependent spouse credits. And so all of those taken together mean that when the second earner, who's often a part-time worker and often a woman, goes to work, she is paying a higher effective rate of tax than the man. And you can see that that it's indirect because the second earner doesn't have to be a woman, but just it predominantly happens that she is. And you can see the economic effect that this would have, because you get real questions about whether to return to work or not, as you know, for reasons like expensive childcare, and having a higher effective rate of tax adds to that decision. Next slide, please. And so the other thing in relation to indirect discrimination is indirect taxes. A lot of indirects here. And this is probably the one that you know about more, which is VAT. So VAT, as you know, is a flat rate tax on consumption, on goods and services. The economic fact is that women, compared to men, tend to spend a higher proportion of income on food, education, and healthcare costs. And that's true, I think, in every country. And therefore, they pay a higher amount of their disposable income on VAT. So it is, you know, per se, it is regressive, and it affects women more than men. Now, you can address this by well-targeted exemptions. So, for example, in the UK, you'll know that we have exemptions on food, on children's clothing, and you can design your tax system in such a way that the VAT regressivity is designed out. But in order to do that, you have to have very good understanding of how these taxes affect men and women. And then at the end, I've put there the kind of counter argument that Also, there are some taxes that disproportionately affect men. So, for example, excise taxes affect men disproportionately because men disproportionately consume alcohol and tobacco. Next slide, please. So I'm going a bit slowly here, but then the next one is a quiz, which is which countries have abolished the tampon tax? I don't know if anybody wants to have a guess in the chat. But anyway, let's go to the next slide, which is the answers. And so this is taken from the BBC. Also, the screen's not very good, but there's a list of countries which have abolished the tampon tax. But you'll see my second question was, does it matter? And the reason that I'm asking that is because probably for most people who are in period poverty, the difference between paying the VAT and not paying the VAT on tampons and sanitary items isn't that significant. If you're having serious period poverty, you can't afford the items at all in the first place. So when the UK announced that it was getting rid of the tampon tax earlier this year, there was quite a big debate about it. And one of the reasons there was a debate was this. So tax systems should be simple, and they're not, right? Tax systems have grown up over many centuries, and therefore, you definitely wouldn't start here. They're kind of big and messy. In the UK, I believe we have the biggest tax legislation in the world. And every single chancellor who comes into power says, I'm going to simplify the tax system. But they never come close. They never really get anywhere because they want to use the tax system to enact their policies, and they want to use the tax system for social reasons. But the problem is, every time we have a new tax rule, at every budget, there's a whole bunch of them. The finance acts are like almost 200 pages sometimes. All those new rules make it easier for the bad guys, and they're normally guys, to exploit the tax system. So the more complex the system becomes, the easier it becomes to exploit, because it's some people, it's their whole job just to kind of look through the tax codes and find loopholes. So some people argue you shouldn't have all these exemptions, you shouldn't have all these rules, you shouldn't use the tax system for these social purposes. A better thing to do would be keep the VAT on tampons and redirect all that money to free tampons for schools, for example, or for means-tested people, for people who can't afford them. So those are the kind of trade-offs that people talk about. But still on the tampon tax, I will say my answer to that is I think the tampon tax has been a really, really important entry point for feminists to start thinking about tax in lots of countries. Feminists weren't thinking about tax at all, and this made them kind of stop and look. And I also think it's brought about societal change to some extent. So Ethiopia isn't on this list, but in Ethiopia they have done a partial exemption of taxes on sanitary products, and it was announced this year by the Ministry of Finance. And that was the first, that was really surprising to my friends here, that the Ministry of Finance was sending a tweet about tampons or sanitary products, they call them here. But it sort of broke down some barriers in its own little way, and it definitely, got people talking about products like that in Ethiopia, which they, culturally it's not that out in the open normally. So I think it's a really important campaigning tool, even if it's kind of economically insignificant. Next slide, please. And so this one is about gender transformative tax policies. So this is like the third rung of ambition. And what we're talking about here is land rights, for example. So, for example, we know that women don't own much property in the world, and disproportionately don't own property and don't inherit it. And there's the statistics there on the slide. So what they've done, for example, in Nepal and in India, is they are using the tax system to have a lower rate or no rate of tax on property tax where the tax is in the name of a woman. So it's using the tax system to affect change. And this, both schemes are fairly new, so we haven't seen all the results of this, and obviously they're open to abuse, so people can put, something in someone's name and not really that woman doesn't really own it or have control of it. But nevertheless, it's a really good example, I think, of how we can be using the tax system to encourage a gender equality change that we want to see. Equally, we can use the tax system to encourage those second earner women back into work by, for example, having tax credits against childcare costs. Next slide, please. Okay, and then so just briefly to sum up the policy bit, and I'm not going to go too far over, Mariama, don't worry. We just want to say, I want to say, we've looked at some individual tax rules, but actually what you have to do is you have to look at the whole picture. You have to do what's called a fiscal incidence analysis and look at how the whole tax and spending and benefits and spending system affects different groups. So as a woman, overall, is the tax system and the spending system working for me or not working for me? In aggregate, is it making me richer or poorer? You can see a headline that I've put there about one piece of research that said the tax system is making gender inequality worse. The problem with this research is it's really tricky and expensive, and we need more of it. Like, essentially, we need to have a much better understanding of how all these taxes, not just individually, but all together, affect gender equality. Next slide, please. So the next slide is about administration, and this is really as important as tax policy, but I've only got one slide on it. But this is about how we collect tax. So you've got the laws and the legislation that are put in place normally by Ministry of Finance, and then you have the Revenue Authority in the UK, it's HMRC, who collect it. And some of the differences, some of the administration problems are far less pronounced in the UK than in developing countries. So, for example, in developing countries, where there is much more face-to-face collection and much less automation and much less use of digital technologies, you get much more instances of harassment and abuse and bribery and corruption, and some really kind of horrendous stories, as you can imagine, about women, especially, for example, women traders at borders, which is something that we're working on a lot at the moment. But in the UK, there's also issues of compliance and whether men and women comply differently. And this is a really interesting field and something you could definitely have a whole talk on, nudge theory or behavioural science. There's some evidence that men and women comply differently, and not enough to kind of understand why. There, and I've listed some there. We have to be quite careful with this stuff, I think, because we don't want to start saying women comply better, so let's kind of hammer them more because we know they're going to pay all their taxes and the men aren't. I think we've got to be quite careful about this. But one thing this really relates to is taxpayer education and providing different types of education for different groups. So for example, women who are starting up their own businesses, or women who have to file for some reason but aren't particularly literate, financially literate, or used to interacting with big institutions. It's about the revenue administration tailoring what it does for different groups. Next slide, please. And this is about women working in tax, and that's not just revenue authorities. So it's also finance ministries, judges, technical specialists, and tax consultants. And the two people on your slide are two women who head revenue authorities in Africa. So that's Doris, who used to head the Uganda Revenue Authority, and Faith, who used to head the Zimbabwe Revenue Authority. So two really kind of amazing and like genuinely inspirational women. What we're finding now is that we're seeing more women in tax leadership positions, but less in tax specialist positions. So while we might see female heads of authorities or heads of departments, when it comes to the kind of transfer pricing experts or these much more specialized roles, they're still very male dominated. Next slide, please. And this is just some research from Uganda, where Doris
is this the end? Because I want to get the questions, if that's all right, Bernie.
Yeah, okay.
Yeah.
Well, I mean, actually, people can read this slide themselves. It's just talking about the differences for a revenue authority where more women than usual work in the revenue authority. And I think that's my last slide. And there's some further reading. Thank you. Sorry for going over, and thanks very much, everyone.
Fantastic. Thank you so much. And yes, we could now everyone can see that tax is a really exciting topic, and we could spend many more hours going over the presentations. I have had some questions in the chat, so I will just go to a question from Ellie, saying Conservatives advocate for super deductions as a way to tackle the issue of corporation tax. Please can Sarah explain a little more about how this measure and what about this measure and why it's not effective? So if you could give a sort of succinct reply to that so we can get through a few questions. Thank you.
Why the super deduction is not effective. Look, as I said in the beginning, I'm not like, you know, a tax expert as such, but obviously when your aim is, as the Chancellor has announced, to raise the corporation tax to 25%, but at the same time you announce a massive super deduction for businesses on spending, and also, you know, that isn't maybe necessarily that effective if, you know, if you want to tax profitable companies more. One thing I should say also in terms of, you know, spending and what gets, you know, what qualifies for a super deduction and what doesn't. Again, I can't tell you, you know, all the details, but, you know, it tends to be things like infrastructure and, you know, things like that. Whereas I think you might be familiar with the work of the Women's Budget Group, who's advocating for a care-led recovery. So, you know, we need to really look into these kind of areas much more, you know, as if we want to give super deductions, and, you know, these kind of sectors and areas really need to be at the forefront and included.
Fantastic, thank you. Does anybody else want to ask a question that hasn't sent me a message or wants to indicate that they want to come in? I think I will take a question myself. They're both really fascinating. Thank you again. I think I'm particularly moved by the fact that in local government we are very versed into looking at impacts, looking at equalities impact assessments. And I think I would like sort of what the feeling is in terms of having that more tied to economic policy and government, because as has been pointed out, a lot of you know, budgetary decisions have been shown, and the cuts and the austerity and you know, and on top of now with COVID and the unintended consequences of Brexit, have been shown that they disproportionately affect those on lower incomes and people from Black and minority ethnic households. So what are people's feeling as to more equalities impact assessments informing economic decisions? I'll go to you, Sarah, first, and then to you, Bernie.
Yes, absolutely necessary. And, you know, again, this is work the Women's Budget Group has done, but, you know, at the last budget, the Treasury announced they failed to publish a comprehensive equality impact assessment. I mean, how on earth are we going to get anywhere if we, you know, if we can't even publish equality impact assessments with budgets? It's, you know, it's, I can't actually believe this is still happening in this day and age. So, you know, absolutely necessary. And unfortunately, we're not there in the UK, which, you know, beggars belief, really.
Bernie, do you have anything to add to that?
Thanks. Yeah, I mean, I agree, of course. And from my perspective, from when I was working in government, equality impact assessments were, you know, a really useful tool for us as well. So if you were obliged to conduct one as part of your policy making process, it made you sit down and kind of think about all those issues. And as I said before, I think it's not just about doing them on individual measures, but looking at, for example, the budget as a whole and seeing what the overall impact, which is so important as well. Thanks.
Fantastic. Great. I'm just looking through the chat. can we go to Rosie Barwell? Do you want to ask a question? And I can see also Monica raising her hand. Sorry, Monica, I didn't mean to ignore you. So I'll go, if Rosie wants to come in and ask a question, and then we'll go to Monica. Oh, you're on mute. It had to happen.
Yeah. Hello, thank you very much. Thank you to both presenters. They were excellent and I learned so much from them, so thank you. I had a question for Sarah on pension tax relief. Please would you just let us know more about that? Yeah, thank you.
Great, yes, so just briefly, so at the moment the rules are if you're a basic taxpayer, you get 20% pension tax relief. If you're a higher taxpayer, you can claim basically 40% pension tax relief. And then if you're an additional rate taxpayer, you can claim 45% pension tax relief. So basically, if you're a higher taxpayer, you get to put more money away into your pension, which isn't, which is basically you get more tax-free allowance on your pension than you do if you're a basic rate taxpayer. And that again disadvantages those who are already wealthy, because you get more tax relief if you have a higher income. And again, I think I put a link to an article in the chat. It's been floated that the Chancellor might consider basically a flat rate pension tax relief. Again, this hasn't materialized yet, but even a Conservative government has to think about how you make it fairer for everyone, really, that everyone gets the same pension relief. Obviously, not anywhere near implemented or announced yet, so more room for campaigning on that.
Right, fantastic. Now we have space for one more question, and I said I would go to Monica. So if you could ask a very quick question, so that we can move on to the next agenda item. Thank you. So Monica, would you like to ask your question?
There we are. Okay, no, I've heard about this thing called the land tax, which some people in the branches of the Labour Party are extremely keen on promoting. And it sounds absolutely scandalous, namely that all conservative landowners throughout the country have land which increases in value every year. And because they're not selling it, they're not paying capital gains tax. I don't know if I'm on the right track here, but I mean, apparently it's just a scandal that the land just they pay absolutely nothing, and the value goes up and up. Is that the case?
Yes. So can I ask Bernie to come in on this one?
Yes,
please.
Thanks. Yeah, Sarah probably knows better than me. But yeah, I think you're right. So if you have a house and you sell it, you'll pay capital gains unless it's your primary residence. When you die and you pass on your house to your kids, if that's what you do, you'll pay inheritance tax. And of course, if you rent out your house, you'll have to pay tax on your rental income. But as far as I know, if it's just the land is just sitting there and doing nothing, then you're not paying any tax on that at all. And that sort of comes into this whole wider debate about a wealth tax. I think there's no really such thing as a wealth tax. It's kind of an umbrella term for potentially a lot of measures that could look to tax wealth better. And one of those would be a land tax. Thanks.
Mm-hmm. So you're in favour?
Thank you so much. It now gives me great pleasure to move to our guest speaker for this evening, who's no stranger to the Fabian's Women's Network. So next up is Dame Angela Eagle, and she's a great feminist and an authority, as I learned from the last time that she contributed to one of our sessions, a great authority on economics, given how it was no surprise given the wealth and breadth of her experience from CBI days, serving in government under both Tony Blair and Gordon Brown, in opposition under Ed Miliband and Jeremy Corbyn, to the present day, where the recognition for her work has resulted in her being awarded and made a Dame in the New Year's Honours List for her parliamentary and political service. So it gives me great pleasure to go over to you, Angela, if you would like to address everyone. Thank you.
Thank you very much, Mariana. It's exhausting just listening to you saying nice things about me. But anyway, it's better than having horrible things said about you. I was asked to just give more of an overview about tax rather than get into some of the weeds of it, like I'm sure you've been doing, because there are different sides to it. And I suppose there's a question I wanted to ask people to think about, which is, what would an ethical tax system look like? And do we have an ethical tax system? I would say that an ethical system would be tending towards equality and fairness, supporting security and rewarding people for doing the right thing rather than the wrong thing. And I think if the way that you look at the way our tax system works at the moment, it doesn't get many ticks next to those kinds of things. And I just want to give you a quick overview of why I think that is. But I also want to get everyone on this call to think about how important these questions are for our politics, because I think lots of people tend to shy away from tax and this whole area of economics because they feel a bit intimidated by it. But actually it's just about life. So you know, how to tax, who to tax, how to distribute it. This is at the center of all of our politics, and a way of measuring what kind of a society you're in and what the values of that society are can be taken if you look at the kind of distributional effects that the tax system has. I think if you look at the UK, we're pretty unbalanced as a society in terms of our tax system. 60% of the tax take now is just 3 taxes. 25.4%, these figures are slightly out of date, but they'll be there or thereabouts, is in income tax. National insurance contributions nearly 18%, VAT nearly 17%, company taxes only 10%, and that is business rates and corporation tax. Duties and indirect taxes, which are mainly made up of fuel duty, only 10%, council tax 4.2%. And we saw that during the Thatcher era, a shift from direct to indirect taxation. So that's indirect taxation is like the VAT and the sales taxes that we have, the duty taxes we have. And we also saw that what Mrs. Thatcher did was take away the large top rates of income tax and take them right down. So from 83%, which was the top rate when Mrs. Thatcher came into power, right down to 50 and 40%, to take the others down from 33% to down as low as 20%. And that's where that shift comes from. This was all because the idea was that somehow people should keep their own money. And of course, doing that with income tax has meant that our societies have become much more unfair in terms of their distribution, and we've had this breakaway of the top 10% and particularly the top 1% and the top 0.1% of very, very wealthy people who have gotten away with gathering great wealth without it being taxed. So that's the kind of system we're in at the moment. And over those last 50 years, this is something a government has really got to think about, a Labour government. We've seen the returns to capital be much greater than the returns to labour. And so over that time, what we've seen is a shift of resources and wealth to those that own rather than those who work for a living. And that has happened across the developed world. So that's one thing to think about, one great big thing that we need to think about whether we should change. But remember also, if you think that you should have an empowering state, then without tax revenues, a state can do very, very little indeed. It can't combat poverty or injustice, it can't fund education, health, skills, retirement, create social security system, and do all the things that the 19th century states in the advanced economies started to do and put into place during the 20th century. And I would say most of those things constitute my definition of a civilization, and not just to have a society where if you get old and you don't have your family to look after you, then that's tough. And so how we raise our tax, what the tax base is, how we can ensure that over time and moving forwards, we maintain a tax base as an integral central part, really, of what sort of a society we want to create, how we can ensure that it tends towards fairness, that it's ethical going forwards, and that it can stand the test of time. There are certain things that are worrisome about the situation we're in at the moment, not only because the structure of our tax take is so dependent on the three big taxes, but because money can be moved around globally. People have found, particularly those who are wealthy, have found it easier and easier to avoid paying tax altogether. And so you've got a situation where there's massive potential, not only to engage in aggressive avoidance, but also to evade tax as well. So you've had the rise of the offshore jurisdictions, many of which, by the way, are under British sovereignty. You've got the issues about avoiding tax and the tax havens that I'm happy to answer questions on a bit later on. So what happens if you have a very skewed kind of society where you get more returns for your money if you own rather than work, where tax rates are low and there are no wealth taxes, has been charted, I think, in a magisterial book by Thomas Piketty called Capital in the 21st Century. And he talks about how wealth in the current circumstances accumulate explosively because, and this book was written before COVID, so I think after COVID we're going to be in a slightly different situation, and the issue is whether we return back to where we were before or whether we try to do something different. But he pointed out that because returns to capital are larger and have been historically since the 1980s than economic growth had been. And if you look through the distortions of COVID, that's likely to carry on, I suspect. Then what happens is that wealth accumulates explosively too, and it becomes a self-fulfilling prophecy. So fewer and fewer and fewer people get increasingly and explosively richer in a way that you cannot avoid or do anything about if you don't think about taxing wealth. And that this is socially and environmentally unsustainable for societies. Now that's one thing that's happening. Another thing that's happening is the rise of technological change means that our tax base in the UK and any geographically based tax base is being eaten away by the platform tech companies, by the rise of digital services, which are often offshore, and the increasing capacity of these companies to do what's known as profit shifting. So what they do is they've got global presence in different tax jurisdictions, and they say, well, we're gonna register our HQ in the area that's in an area that's got the lowest corporation tax. So in the EU, that would be Ireland at 12.5%, for example. And then what they then do is that they then manipulate their internal company auditing stuff to profit shift. So they shift profits round to where the tax that they would have to pay on those profits is the lowest. And so you end up with companies like Amazon, who have huge multi-billion-pound turnovers in the UK, paying virtually no company tax or capital gain, corporation tax, no profits, no tax on their profits, and yet they've got huge turnovers in our country. So if they were all on the high street, they'd be paying business rates, they'd be paying corporation tax, but because they're offshore, we get very little from them. And so as a country, our tax take and our tax base erodes. And also, of course, because they have that tax advantage, they're then they have a competitive advantage against the high street. They destroy the high street, and our tax base erodes even further. Just at the time when, because of technological advance, we actually need to educate people more and use taxes to improve our education and skills base, so that we can transform our economies so our people can have good, prosperous jobs. Just at the time when you need to do that, your tax base is disappearing. Another area where the tax base is bound to disappear quite soon is fuel duty, for example. You know, we're trying to phase out fuels which are carbon heavy and replace them with different fuels. But if we were to wave a magic wand and do that tomorrow, we'd have no tax base. We've got to create a new tax base for the new ways of doing things like powering our cars, powering our domestic heating appliances, etc. So all of these different things create huge policy issues, huge issues of equity between countries, equity between businesses, depending on how they're delivered, and equity between tax jurisdictions. Because what you want to do is try and stop a race to the bottom with what's known as tax competition. So Ireland reduces its corporation tax to 12.5%, and everybody sends their company, their sort of company registrations over there. And that makes it harder for anyone else to maintain corporation taxes of a certain type. So everybody starts reducing their tax, and you get a race to the bottom. Tax base disappears. And as I was saying earlier, only 10% of our tax take annually in the UK now is company taxes. Now you might think that they ought probably to pay a little bit more than that, so that they can help us finance the roads and the legal systems, so that they can enforce their own requirements as a business and as an organization, rather than leech off everybody else who's paying, etc. So we can talk about all of that. Now, what I would say is that as socialists, we need a progressive tax system, and we need to make certain that people pay their fair share, and that our tax system results in a more equal society rather than this exponential drive of wealth away from everybody else. If you think about it, I don't know whether you've noticed, but the Bloomberg Billionaires Index has to be updated every day because their net wealth changes so quickly. And if you've been looking at what's been going on during the COVID crisis, you'd notice, as Thomas Piketty implied, that those who are billionaires have seen trillions and trillions and trillions of pounds of extra wealth added to their holdings, while many, many people have suffered enormous losses. And so I would say that once it gets to that kind of level, that inequality is inefficient economically. There's only so much money you can spend, after all, if you're Jeff Bezos. I mean, I know he's trying to go into space, and Elon Musk is trying to mine Mars, but really that's just because they've got more money than they know what to do with. And when it's that concentrated, it makes it very, very much harder to justify. And so I think if you look at where we are now after 40 years of neoliberal economics, with this idea that somehow people should pay the lowest taxes possible and that there's no collective approach to any of these things. We have societies that are more unequal than they've been since the early parts of the 19th century and the big industrial revolutions that happened there, the Belle Epoque in France, the US industrial monopolists at the turn of the 19th century, Dickens's London, and that's not healthy. So what we need to do then is create a better, more equal, more ethical tax system where we share the burdens of the changes that we're going to have to make to our society in order to ensure that our people have a prosperous and happy time in the 21st century and can look forward to good lives in a good society. We need to crack down on the tax evasion and avoidance, globalized that globalized financial markets have meant. So to this extent, the first little bit of, I suppose, light at the end of this quite dark tunnel has been the G7 discussions about having a global minimum tax rate for corporations. I don't know whether you noticed, Rishi Sunak made a great play in coming to an at least initial agreement on having a 15% minimum tax rate for all corporations across the G7 and the OECD. He then rather ruined it by demanding that British financial services ought to be exempt from it. But anyway, there you are. But what you actually need is a global minimum so that you can abolish profit shifting and you can stop that competitive sort of tax competition and that race to the bottom. That would mean even at 15%, if we had a global minimum at 15%, that would create about 8 billion more a year in tax take just in this country. You've got also to think, I think, about turnover taxes for global multinational companies so that you can tax them on the sales and the turnover they do in your country and leave them to sort of deal with all of that. They've got to pay more taxes because they're not paying their fair share at the moment. And then we need to deal with the offshore financial centres, get transparency, beneficial ownership, and need to be transparent in the trusts that are offshore. And we need to crack down on aggressive avoidance as well as protecting our tax base. And then, of course, the final thing we have to do is look at how our society will change and how we need to evolve our tax base. Obviously, carbon taxes might be one thing, pollution taxes might be another kind of way of dealing with it. So there are all these things. Land taxes is very much also a thing that you could do because people can't A, hide land or B, export it. So they keep on paying tax on it. So there are things like that that you can think of and adjustments that you can make. But you have to remember, I think, what the ethics of what you're trying to do are, what the aim and the outcome that you want to see are. And what I say is that you should tend it towards Labour values.
That was amazing. Thank you so much. I think there's lots of food for thought there. And as ever, you managed to explain quite complex issues in a really palatable way. I want to jump in with a first question, if I may, in that obviously you're here as in your own personal capacity, but we all as Fabian women want to see, I think, more progressive policies that are fairer. And so is this now a time where we can be more bold about economic policies, given that Labour, it's always been a bit of an Achilles heel for us when it comes to the public perception of how we handle the economy and in turn our reply on not being just the tax and spend party. Is it time for us to take that on its head and have a bolder narrative? So that's my first question.
I think the Tories have spent more in a year than we did the whole time we were in power, by the way. 300 and something billion. A tenth of that on test and trace, as far as I can tell, and that doesn't even work. So I don't think we need to take any lessons from them. I think we need to have much more confidence about our values. I think that we all have kind of, I mean, I lived through the 1970s, because yes, I am that old, and the 1980s. And I lived also through the Tony and Gordon rehabilitation of our sort of economic bona fides, which allowed us to be elected in 1997. But I think that government in many ways was a bit too cautious and not optimistic enough that it could change the political weather except by redistribution by stealth. I think we've got to talk about what our values are and what kind of a society we want to create, and why we then need a fairer tax system. But I think we have to do it in a way that properly identifies the challenges ahead. And we also need to realise that the propaganda firepower of our opponents is formidable. And we have to make the arguments that we make by a few policies which are very, very redolent of what our values are, as well as a critique of what the government are doing. I actually think that the COVID situation has meant that a lot of those understandings about what right-wing governments and left-wing governments do are dissolving. But it's possible to be a high-spending right-wing government. Just look at this lot and look at how they spend, and look at the values of what they spend on. Look at how they outsource to their mates. Look at how they don't use the public sector to do things. Look at how they're always trying to inject their own values into how they do things. We have our own values which we can share with the British people. And we can ensure that we make these arguments consistently, so that people know that the social security system and the welfare state, the fact that we created a health service, the fact that we stopped people dying without support or from hunger, which they were doing in the 19th century, we need a modern equivalent of that, because societies can be modern and very brutal, or we can put some of our values into effect, and we just have to make the big arguments.
Fantastic. Okay, I'm going to go to questions. I have a question. Can I go to Scarlett O'Hara? Scarlett, are you on the indicator to speak?
Hi,
fantastic.
Mariella.
Go ahead. Hi.
Hi, Angela. I also remember Thatcher's time, and I was wondering about sort of self-employed. It feels like that was a time when being self-employed was really promoted. I mean, it was all about the self, really, wasn't it? And that you had much more control. So I'm wondering if it is true that people who are self-employed actually pay less tax, and how you feel about that.
Well, there are different sorts of employment. There's apparent self-employment, where you are forced to incorporate because otherwise the people that you're selling your services to won't employ you. And that means that as an individual, you incorporate as a company, which means that you take on all of the risks of the work you're doing. So if you're ill, you don't get paid. If you want to go on holiday, you don't get any holiday pay. You don't get any support of the sort that a PAYE kind of employee would get. But if you're in a sector where you are trying to get work and that is what is required, then you have to do it. Now, we should be thinking about how we can redesign our employment market to give those people who are genuinely self-employed some rights, maybe to plug into a kind of national insurance contribution which would allow them to accumulate rights, maybe to have taxes paid by people that use freelancers that go into that kind of pot, so that you can more flexibly have access to the pooled collective of some kind of social insurance, be it for holiday pay or sick pay. And we haven't really redesigned our labour market support systems to demonstrate that actually the world of work has changed. So that's the first thing. The second thing to say is, if it's apparent self-employment like the lump and it's just a tax scam, it ought to be stopped. And the revenue should absolutely come down on it like a ton of bricks. Now, when I was in the Treasury, I did a lot of work on apparent self-employment in the construction industry. The civil servants were horrified. They didn't want it done. The Prime Minister wanted it done, and I managed to get him on side. So then they dragged their feet. And so the nearest thing I got while I was in the Treasury was a concept of deeming. So if you go onto a building site and everyone's self-employed, but they're all going there every day and they're being controlled by the people that are building the building, you can deem them to be employed. And then you can charge that employer the national insurance contributions and make them pay the contributions. And that's what we should do. Now, that even survived into George Osborne's time, because not only did that apparent self-employment start and has been a feature of the construction industry for a long time, it started spreading to hospitality and a range of other areas as well. And so the loss of tax and national insurance contributions from that spreading everywhere began to be a structural problem. And so it is something we need major reform in the way that our labour market works in order to get fairness back and give self-employed, actual self-employed people a fair chance to pool the risks, and also to give those that are exploited by being told they've got to say they're self-employed when actually they're not. We deem that they are, and we deem that the proper taxes are paid. But that needs a robust enforcement mechanism. And if there's one thing that austerity has taken away from all of our structures since 2010, it's the lack of ability to enforce virtually any rule you can think of. You know, the horse meat in human food was found by the Irish. It wasn't found by our enforcers over here. So there's an awful lot of rules and regulations that simply aren't enforced at the moment. Fraud, but don't get me into talking about that. That's virtually not policed or enforced either, etc. I could go on, but I won't.
I'm going to squeeze in one more question from B. Brown, who's been waiting very patiently. So B, would you like to ask a very quick question, because I'm mindful of time?
I'll try to make it quick. Thank you. I studied law, and during work experience was quite shocked how certain chambers in the city would speak very publicly about how to structure offshore arrangements, how they would facilitate various corporate structures designed effectively to get around our tax system. I have always assumed that the reason we don't put a stop to that is because we must quantify the gains that the law firms make and that the accountancy firms make in the wrong way, because we tend to think of them as generating GDP. And I wonder if there are any studies or ways that we can in fact quantify the way that they are allowing revenue to leave the UK, because that would, I think, be a more accurate evaluation of what they contribute to our economy, because we know that so many examples of corruption from all parts of the world have been facilitated by London firms across professional services. So I wonder if you have thoughts on that. Thank you, Angela.
I couldn't agree more. I think that these facilitators and middlemen are part of the problem. If you now look across the tax havens, there are many of these facilitators of tax evasion and avoidance who offer packages, like package holidays. We'll give you a company and a name and an address over in that island. We'll organise a structure over here so that you can put your money in. And they give people packages so that now the chance of avoiding tax by using these quite sophisticated structures as being kind of systematized. So more and more people can do it, and more money is put out there. More and more ordinary people who aren't as fabulously rich as the people that normally do this kind of stuff are beginning to say, oh, well, you know, why don't we do it? Everyone else is doing it. And that's what I mean about an ethical tax system. It's not ethical to shelter and hide your money like that. You know, and the more that people think others are doing it, the more they'll want to do it. And it's being facilitated by these kinds of things. It should be a matter of shame to me. And that's why I was talking about an ethical tax system. So the way to deal with this is to start fining the people and coming down like a ton of bricks on the people who are facilitating it. And take a much harder look at what they do across the piece. So it's just not really very comfortable for them to get into that business. And transparency about where money is, who the beneficial owners of companies are. You know, and again, you could close down the tax havens if there was international agreement. And then you would deal with an awful lot of money laundering, you deal with an awful lot of financial crime and terrorism, and you deal with an awful lot of the money that is now currently stolen by people who are dictators in particular areas from developing countries. So yeah, let's get the secrecy ended and let's have a really, I mean, this government will never do it. You should listen to the mealy-mouthed words that they come out with when they talk about this stuff. They really want those kinds of systems and those offshore trusts to persist. But we can't deal with the kind of system we've got at the moment, where there's so much money that is hidden and taken offshore, and stop it spreading if we don't dismantle these structures, much less allow them to grow. So you're exactly right. And I would, you know, if I had my magic wand, I know what I would do.
Thank you.
That's fantastic. We all wish we could have a magic wand to deal with tax havens and have a fairer system in place. When we look at our pay slips and we see the money that comes out, and we realise that others are actively avoiding paying their fair share. I think we're all agreed. Thank you very much, ladies. We've come to the end of this session. I hope you've enjoyed it and persisted in this heat. I hear it's going to rain at the weekend, so yes, I for one am looking forward to that. Next week we're going to be focused on a feminist green economy, so please do register for the event, as it takes a feminist lens on the green economy and the Green New Deal, which is, you know, it rolls off the tongue, but actually I still feel that I need to understand what the devil is always in the detail, what that actually means. Next session will be chaired by our Fabian Women's Network, Hannah Phillips, and includes Pretcourt Gill MP, Anne Pettifor, and Anis Glugher. So without further ado, I'd like to thank Angela for an amazing contribution as ever, and also for Sarah and Bernie and all the fabulous Fabian Women's Network women behind the scenes, making sure that everything works. And so without that, I will now say good night and thank you very much. See you soon. Cheers.
Good night, sisters.
Thank you.
Thanks, everyone. That was great.
Thank you.
Very much. Take
Good
care.
night.
Good night.
Thank you. Thank you. That was very informative.
Thank you. Thank you.
Bye.
Great.
Bye.
Cheers, Kelly. Oh, you're a
Hello,
superstar.
Mariana.
Thank you.
And
Right.